All right. Good morning. Stocks rally after Fed minutes, but futures drop overnight. Crude oil plunging. DoorDash soars. Mixed earnings from Airbnb. Actually, no, we did that yesterday. Mixed earnings from, well, when the notes go bad, right? When the notes go bad. We actually have some earnings from Nvidia. We have earnings from TripAdvisor. We have Fisker. We have Walmart. And we have DoorDash. And it looks like it's going to be an interesting day shaping up. So we're going to cover what you need to know. Now, if this is your first time, my name is Mark Hodge, and I'm head coach at Rockwell Trading. On a typical morning, Marcus and I, with more than 47 years of trading experience and watchful eyes, we are sifting through mountains of news websites, newsletters, and reports, and then we take the most important news and go live right here to share with you what you need to know as you head into the trading day. Sometimes the notes are great, sometimes they're not what I expected. But if this is your first time, I know it can be a little overwhelming. So don't worry, we have a special video just for you, and we will link it in the description. It's a great place to get started. Now let's go ahead and just get to the charts here, and I'm going to bring up a chart of the S&P. And here we see the S&P up 0.10% yesterday. Not a real big range. The focus being on the Fed minutes, and with the Fed minutes there, the reaction to the minutes was very positive here. So let me go to a 5-minute chart, and you'll see here that the S&P opened a little lower yesterday. This was the open of the day. It slid a little bit, went sideways, chopped around a little bit, and this big bar here, this came at 2 p.m. Eastern time, and this is when the Fed meeting minutes were released. And so these are minutes or notes from the previous 2-day Fed policy meeting that the Fed has, and traders were looking for cues as to what the Fed might do with their monetary policy decisions, and we see that there was a positive reaction. So traders like that news. We'll talk a little more about that. If we look at the Dow actually a little misleading just on a daily chart here, but same reaction. So the Dow, let's reset that. The Dow sliding a little bit in the morning, chopping around, and then a positive reaction to the minutes. And if we look at the NASDAQ finishing slightly lower, but same reaction there, responding positive to the minutes. So yesterday, the major indices finished mixed, with the S&P positive and the Dow and the NASDAQ slightly lower, and a real nice positive reaction to the Fed. Well, today, another day, another story. But there are 3 things that traders are paying attention to right now. The big 3: Fed, and you could tie inflation into that story there, because the inflation is the issue. The Fed reacting to it is kind of combined. Then you have Russia, Ukraine tensions there, and some missed signals, mixed information possibly, and also earnings winding down but still in the spotlight. So let's talk a little bit more about yesterday and the Fed minutes. So the minutes showed that the Fed is ready to raise interest rates and to reduce its balance sheet soon. But there were really no surprises here. And this is why the markets responded positively to the minutes. So in the minutes, there really weren't any suggestions that the plan will raise rates more aggressively than expected. What was said was pretty much what was expected, and without any real big red flags there or concerns. Traders liked the information. Quote from the minutes: participants observe that in light of the current high level of the Federal Reserve security holdings, a significant reduction in the size of the balance sheet would likely be appropriate. That was in the meeting summary. The Policymaking Federal Open Market Committee, FOMC, decided after the 2-day session that it would not raise interest rates yet, but strongly indicated a hike is on the way as soon as March, which again is completely in line with what traders are expecting. Participants acknowledged that elevated inflation was a burden on U.S. households, particularly those who are least able to pay higher prices for essential goods and services. And we could see here what the reaction here. Let me refresh this. This is the Fed Watch tool, and this is tracking Fed funds futures to give us probabilities on what traders expect. And you'll see here that with the Fed minutes, the shift here to an expectation of a 1/4 point rate hike in March versus a 1/2 point has changed. Yesterday, going into the minutes, it was about 59%, I believe, that the probability of a 1/2 point was on the table. Now that's switched again. It's back to a 1/4 point. So after the Fed minutes yesterday, now we still have some important data before March. So we still have a jobs report before March's Fed meeting. We still have CPI data coming out before March's Fed meeting. But now there has been a little bit of a shift with traders thinking that the Fed won't be as aggressive going in with a big rate hike in March. So we'll keep an eye on this. We'll see what traders are counting on or betting on. But right now it looks like the 1/4 point rate hikes, which it would be normal and consistent, that's pretty much expected at this point in time. So Fed, inflation in the spotlight. We also have the Russia-Ukraine situation. And yesterday, NATO officials, they did accuse Russia of increasing troops at the Ukrainian border. And U.S. and Russian aircraft in the Mediterranean Sea flew close to each other over the weekend, according to the Wall Street Journal. So we do have these tensions. This has been something that's been going on for weeks, if not months. And now we're starting to see that traders are responding. There are concerns that there could be an invasion. We'll see. Russian officials said that they were reducing troops at the border and that training exercises were over. That doesn't appear to be the case, but traders are keeping an eye on that. Now, the third item traders are working on or paying attention to, it's still the final stretch here of earnings. And we had a couple of big earnings moves. Let's go ahead and look at DoorDash, Dash, the ticker symbol here. So Dash, big move pre-market, now getting beat up over the last couple of months. But you see here, looks like Dash has found some support. And with the earnings reaction up 22%, yesterday after the bell, the initial reaction up 32%. It's pulled back a little bit, but 22%. Traders can't be upset with that if you're holding DoorDash and looking for a good earnings beat or win. DoorDash up, even though the company reported a wider than expected quarterly loss. The company reported a loss of 45 cents per share compared to a 25-cent expected, but DoorDash's fourth quarter revenue of $1.3 billion beat estimate. So positive reaction there, even though there was an earnings miss and a revenue gain there. We can take a look at Walmart. So Walmart reporting down just 0.5%. They actually reported better than expected earnings and revenue, helped by spending on groceries and gift spending over the holidays. Walmart said it's focused on value as some customers are growing nervous about rising inflation, and that the company is on track to hit its growth targets, long-term growth targets that is, but it has called for an adjusted earnings per share growth plan. Walmart also raised its dividend by a penny to 56 cents per share, and they plan to repurchase $10 billion worth of stock in the current fiscal year. So this one's been all over the place. Pre-market was up a little bit, now down a little bit. Not a huge reaction there. Let's take a look at Cisco. So Cisco up 2.9% pre-market. Now Cisco had an earnings beat. They reported adjusted earnings of 84 cents a share with revenue of $12.7 billion. The expectation, according to Refinitiv, was 81 cents per share, so 84 versus 81, and revenue of 12.65 instead of 12.7 billion. They also gave a solid outlook for the rest of the year, and traders are liking that information. Up just shy of 3% pre-market as we approach the opening bell. Let's take a look at Nvidia. NVDA, the ticker, down about 2.5%. So Nvidia did report better than expected earnings, so down in spite of better than expected earnings. The chip maker posted a profit of $1.32 a share, and this was compared to $1.22 that was expected. Revenue also better, but first quarter gross margin guidance came in slightly lower than analysts were expecting. So down just a little bit pre-market, and yeah, Nvidia coming off of these recent lows, down just a little bit. Not when you look at these ranges, not a big move pre-market in spite of those earnings. Let's take a look at TripAdvisor, TRIP, the ticker, down over 8% pre-market. The company did miss earnings. They posted an adjusted loss of a penny per share, and this was it was expected that there would be an 8-cent profit per share instead. So reporting a loss of a penny. The revenue was also worse than expected. Another one, AMAT, Applied Materials, AMAT, up a little bit pre-market, up 2%. So Applied Materials did report after the bell yesterday, and they had an earnings beat. They reported first quarter adjusted earnings of $1.89 a share on $6.27 billion in revenue. The expectation was $1.85 per share, so 4 pennies better, and revenue was expected at 6.16 better. So slightly better than expected, but that's giving AMAT a 2% boost in pre-market trading. And yeah, we've sold puts on AMAT before. We've traded this with our wheel strategy. Nice wheel candidate there. Nice to see earnings out of the way too. Let's look at one more. Fisker, FSR, the ticker. Fisker up 1%, so not a huge move, not a huge reaction to earnings, but shares of the electric vehicle maker are up 2.3% after the company's quarterly financial results were better than expected. Fisker posted a loss of 47 cents a share, but that was not as bad as investors thought, so up a little bit pre-market. Now, let's go ahead and let's take a look at futures here. I'm going to bring up the E-mini S&P. E-mini S&P down 0.5, 0.6%, and we can look at a 5-minute chart here. And we see that overnight, it's really, there was a sharp drop early on in the Asian session, and then just kind of chopping around. Another drop in the European session, and then a slide as we're getting closer to the open, but bouncing back a little bit. This move came on unemployment claims. We also had Philly Fed manufacturing, so Philly Fed manufacturing coming in a little bit worse than expected, and unemployment claims coming in a little higher than expected. So unemployment claims, 248,000 Americans filed for first-time unemployment last week, and this was compared to the 217 that was expected. So unemployment numbers still just kind of all over the place here, and creeping up a little bit after 2 lower numbers. We had 2 weeks where numbers were lower than expected, creeping up a little bit, and we see that the initial reaction, futures ticked lower and then bounced back a little bit, but E-mini S&P now down 0.6%. The NASDAQ futures down 0.75% as we approach the open. Dow, not as bad, down 0.5%. So right now, NASDAQ futures leading the indices lower. We'll see what happens when markets open up, but it's always nice to see a little bit of a drop in case there are opportunities for us to be trading the wheel. And if you don't know what I mean when I say the wheel, definitely check out our videos and the strategies that we like to use here at Rockwell Trading. I'm going to pop on over to our mastermind Zoom call where we trade live and we look for opportunities together in the market. But for mastermind members watching this video, and for all of you at home just watching and keeping up to date with things, we appreciate you. Give this video a like and we'll see you next time. Until tomorrow, happy trading, everybody.